Hello friends, as promised earlier this week, this will be a video where we take a look at my portfolio, what has happened there since December when I last time updated you on my portfolio. But before going to the subject of the video, I strongly recommend that if you didn't watch my last video, Stock Market Crash 2022, The Vampire is Still Alive, it was about what Jeremy Grantham has recently said about the current market we're having and what does it mean for stocks, what does it mean for us investors. I really encourage you to take a look at that video of mine first, because if you check that video first, you will probably understand better what I did in my portfolio recently. So go and have a look at that one before getting into this video, but if you don't want to do it, that's okay. And for those of you who have already seen that video, let's go and let's check what's up with my portfolio now. Let's go. So here we are. Let's first take a look at how my portfolio looked back in December 21, the last time I updated you guys on the Flow Traders video. This is how it looked back then. And as you can see, pretty lots of stuff there, but there will be less stuff now since, as you can see from the right hand side, I have sold out of a few positions. There are two ETFs. That was the UK focused ETF and the US equities focused ETF. These two I have liquidated to cash, and I have to say I still continue investing in these two. Just a really small sum of money every month. That's my monthly ETF investing plan. But the money that had gathered there over time, I took that away and put it as cash. And then you can see that I have sold out of 5 positions in my portfolio. Just very quickly to tell you why. First up, Atria, the Finnish company in the food industry, doing meat, chicken, convenience meals, everything we eat daily, daily products, lots of different products with Atria. Nevertheless, sold out of the position. I thought it was just a little bit overvalued, not much, but still a little bit overvalued, and decided that it was time to get out of that position. Then Olavi, Finnish drinks manufacturer, excellent company, but after re-evaluating the stock, just simply overvalued in my opinion. Nothing wrong with the company, the stock just overvalued. Olavi has had a great run, great business growth in the past. Most likely it will continue the growth in the future too, but still taking all of that into account, the stock was simply too expensive for me. Next up, Essity, the hygiene product company from Sweden, operating very internationally. I think the company has great tailwinds with emerging markets, for example, and for demand for their products in emerging markets. But pretty much the same story as with Olavi. Just even though it's a good company with good tailwinds for the future, the valuation simply too high, and I couldn't keep it in my portfolio anymore. Then you see two big names which surprise even myself. Alphabet. I sold out of the position before the earnings this week, so I missed those gains. So short-term mistake there, but to be honest, Alphabet was probably the most difficult sell for me here, because the company is really hard to evaluate. Everybody knows what they're doing. They are a cutting-edge technology company ruling the world, but still very difficult to put a valuation on them. To be honest, it might be overvalued, it might be undervalued. I wasn't sure, so I ended up selling it for now. And why didn't I hold it? Well, if you check the Grantham video, I was just talking about US equities is something that is very likely to be overvalued at that time, and Alphabet and Berkshire Hathaway are two big components of Standard & Poor's 500. So I have reason to suspect that their valuations might have some air in them. They might have ballooned too big. But as said, really hard to evaluate Alphabet, and I'm not saying that I wouldn't return as an Alphabet shareholder even very soon if possibility comes. The company is difficult for me, but I like it. Let's say so. Don't know what's going to happen with that in the future. We will see. And then Berkshire Hathaway. Obviously, I'm a big Buffett fan, but after looking at the company, my judgment was that it's a bit overvalued at this time. Great company, everybody knows it, but looking at the US equities valuations right now, Berkshire Hathaway might have ballooned too big. Kind of the same theory I had with Alphabet, selling of Alphabet there. Nevertheless, if these two become cheaper in the near future, I'm definitely one to buy back to those, probably, as they are amazing companies, both of them. But now, let's turn our focus to how my portfolio looks today, when we are living February 2022. And here we have my portfolio as it stands today, when filming the video. Let's start off by just saying this number really is not that important, as we're playing the long-term game here, but I have been now investing for something over 4 years. My performance so far is 63.99% on plus side, luckily, as you should be in this kind of bull market where we have been living. But that number don't mean much to me, as my focus is always long in the future. I very rarely look at positions that I would consider keeping, let's say, a minimum of under 1 year. Usually my holding period for the stocks are most likely to be 2 to 10 years, and with great companies that are always on right valuation, I guess forever then, as long-term investors do. But just for those of you who are interested in how I have been doing in my young career as an investor, the number stands today in plus 63.99%. But let's get now to the real business. As you can see, here is my portfolio as it stands today. Cash being my second biggest position, but let's start off with that one still. 20% of cash available. Obviously, I am not planning to keep it as cash. This is a reserve that I will deploy when I find a great company that is undervalued. Might be that I have that company already here on my portfolio and you're seeing it now, or then it might be a completely new position. But in this current economic climate we are in, I want to have 20% of cash now. But as said, the situation can change already this month or next month, or then I don't buy anything for the rest of the year. But only future will tell. Now it's 20% cash. Then 2 positions I have bought more after December, and they are clearly my 2 biggest positions at the moment. Biggest position now, Flow Traders with 21%. If you don't know what Flow Traders is and what they do, go and check my video on Flow Traders, and there you find the rationale why it is the biggest company in my portfolio at the moment. I don't think much things have changed since I made that video, so everything I say there still holds true today, and that's why it's the biggest position of my portfolio at the moment. Then, long-time favorite in my portfolio, which I have been owning actually quite a long time already. And now after December, I have again a little bit bought more of it, Alibaba. Again, if Alibaba is not familiar to you, go and watch my video on Alibaba, where I did a deep dive on Alibaba's business. The video is from the last fall, but still, things I say in that video, not much of those things have changed, or the situation with Alibaba as a business hasn't changed. The news sentiment has just been terrible for the company for 1 year now already, and that's fine by me. When the stock gets cheaper, I buy more of it, as I have done with Alibaba. And I just want to say that if Alibaba wasn't a Chinese company, if it was a US company, the valuation of Alibaba is dirt cheap at the moment, in my opinion. And much of the stock price of Alibaba has been affected by only sentiment. And I try to take advantage of it, obviously. But let's see what happens with the company. Of course, it carries its risks as Chinese companies do. I also talk about those risks in my Alibaba video, so go and check that one out. But I'm not going anywhere with Alibaba at this time. I'm keeping my money in the company, and I have faith in it, let's say so. Then, actually all the rest of the positions you see there in my portfolio, no changes there. They are hold positions for now. Maybe just quickly comment on Gazprom, which has taken a little bit of beating recently due to what is happening in Ukraine. Nobody knows at the moment what is happening with Russia-Ukraine situation and how Gazprom as an investment is affected. Surely it is. Gazprom is a very central part of this crisis going on, but I'm holding it, the position I have in my portfolio at the moment, but the situation with Gazprom as an investment is, of course, very interesting at the moment. Something might happen fast, something might not happen fast. I'm following the situation, I'm evaluating the situation all the time, but I will not make any too quick, hasty decisions. I will keep my cool and take it easy and see what's going on with Gazprom. No panic moves, but still, well, you know, it's a situation that needs to be monitored at the time. Then just been holding the positions of Intel. I feel Intel is still undervalued. So same story with two other Chinese internet stocks, JD and Baidu. And the rest of the stuff there is ETFs with the blue background. All of them are ETFs. As said, they are focused on emerging markets, China, mostly on China. Myself, I'm feeling that the US equities, maybe even European equities, when we talk about ETFs, are overvalued at this time, and I want my money to be in these emerging markets and in markets that I consider having more fair valuations than, for example, US equities, and that was why I sold off the UK and US equities ETFs, as I just told you, but I will keep investing in those two as well as the emerging markets ETF, the iShares Core MSCI and the FTSE China 50 every month. For those four, I will every month just invest a small amount of money. That's my ETF investment plan, nothing too special in that one. So, as a conclusion, as you can see, flow traders and Alibaba, I have bought more of them. Cash position has increased great deal, and everything else that is left in my portfolio is untouched from the December. So basically hold positions. Obviously monitoring each of them. If their valuations change, I might buy more of those stocks, or I might sell them, but only future will tell. So here it was. And thank you for watching this video. I will continue to other topics after this one, and if you want to share your thoughts on my portfolio, what do you think of these stocks? Is there something you own yourself? Is there something that shouldn't be there? You disagree with me that is not a good buy or a good position to hold in portfolio? Please share your thoughts in the comment section below. I would love to have some conversation going on there too. But without further ado, I wish you a nice evening or morning or afternoon, whenever you're watching this video. I see you in the next video. Bye bye.